Nike stock is up over 15% today after reporting earnings. This is the highest the stock price has been since the tariff sell-off earlier this year. And of the stocks on my personal watch list, Nike is up the most today by far. So today I'm going to provide a look at the latest earnings for Nike stock and give a brief stock analysis. I'll share what details I think sent the stock up 15% today. On top of that, I'll be sharing the latest dividend increases this week brought to you by our partners Seeking Alpha. That includes popular dividend growth stocks like Kroger, which increased their dividend by 9.4%. That's a company I used to own, and many of the people in our community still own the stock. Let's roll the intro and get into this video. My name is Zach. This is Dividend Data, and you should leave a like and subscribe to the channel if you enjoy the video. Throughout, I will be using the stock research tool dividenddata.com. We currently have our summer sale where you can get 50% off annual membership. That is only going to be available for a limited time. We're about to enter the last week of the sale, so get it while it lasts. If the tool helps you find just one better investment, then it way more than pays for itself. There's a 30-day money-back guarantee, so no risk in trying it out. The link is in the description and pinned comment of the video. Now let's take a look at Nike stock. As you can see, the current price is now up to $72.10, which is up 15.29%. And as you can see, the stock is still down significantly from their all-time high stock price of $177.51. And Nike has been going through a rough time. We have leadership changes, we have declining earnings, and then we have this tariff news that was compounded on top of it. And here you can see that in the latest quarter they just reported, they had very low earnings per share of 14 cents per share. But that was actually an earnings beat that beat expectations by 16.67%. And they beat on revenue as well. So why is the stock going up? Well, there was a little bit of positive news around the tariff situation. But also, I think analysts are coming to the realization that Nike stock may be bottoming and the worst performance is right now. So I'm going to use the AI analyst over on dividenddata.com to summarize the latest quarter and earnings call for Nike. And the interesting thing that we will see with Nike's earnings here is that this quarter was not good at all. And you should think about that in the future if you're trying to time earnings news because you think the stock will go up or down after earnings. A lot of times it's a little unpredictable. Nike had a terrible quarter, but the future looks better. And a lot of times the stock market looks forward to the future. So as we can see, Nike's revenue came in at a 12% decrease year over year. And for the full fiscal year 2025, which they just ended because they're on a little bit of an accelerated fiscal calendar, their revenues were $46.3 billion, which are down 10% year over year. And they're seeing declines across the board, both in Nike Direct, which fell by 14%, and in their wholesale revenue, which declined by 9%. Gross margin fell as well to 40.3%. I think that was due to discounting old inventory, if I remember correctly, from their prior quarters. And diluted earnings per share came in at 14 cents per share, which was an 86% decline from the previous year. For the full year, net income was $3.2 billion, down 44% year over year. And EPS of $2.16 was down 42% year over year. Despite that, they continued returning capital to shareholders, $5.3 billion through both dividends and share repurchases. So you might see that and say, hey, why is Nike stock up 15%? Well, as I mentioned earlier, the future is looking a little bit better. On their earnings call, they gave key insights around inventory, tariff impacts, and outlook for fiscal year 2026 that made investors a little hopeful about the future. As I mentioned, they're trying to liquidate a bunch of their old inventory, which is why gross margins and profits are going down right now. And they're expected to finish that in the first half of fiscal year 2026 and end the year in a healthy position. In other news, we know that tariffs are a big overhang on stocks like Nike, but that news has recently gotten a little better as clothing items have become less of a focus around tariffs. So Nike has now given clarity that Chinese tariffs represent a $1 billion cost headwind, which is still a lot of money, but it could have been worse. And they're adjusting their supply chain to address this. A lot of Nike's manufacturing is also in Vietnam, and their tariffs on clothing will not be a key focus. Overall, the company gave outlook for fiscal year 2026. And they said that they anticipate continued headwinds for the first half of the year, but this is where the stock went up. They say they see a clear path to recovery and a return to sustainable, profitable growth. And if that's true, that's the reason why people are starting to buy Nike stock now. It has sold off still a ton from their all-time high. In fact, they are still down nearly 60%. And in April, during the tariff sell-off, that was down 70% from its all-time high. That gave the stock a 3% starting dividend yield, which was the highest in the entire history of Nike stock. This, by the way, is a great dividend growth stock and has historically had fantastic total returns in the market. In fact, even after being down 60% from its all-time high, the stock still has a 12,800% total return since 1990. That was as high as nearly 30,000%. And even after going up a bit, the stock's not that bad. The dividend yield's 2.23%. As you can see, they're still expecting EPS to be down overall in fiscal 2026, but they're on a projected path of growth in 2027, 2028, and 2029. So if they continue that well into the future, this could be still a good entry point. If we take a look at the Nike dividend, it is still sustainable and it is reliably growing. The 10-year compound annual growth rate of the Nike dividend is 11%, and the 3-year CAGR is 9.46% despite all this poor performance in recent years. In fact, the most recent Nike dividend increase was 8.1%. And the dividend safety is still good. The 2024 free cash flow payout ratio was 32%. Now, I assume that's getting much worse in fiscal 2025 and 2026, but it will be sustainable. In other news, dividends are still growing. We have a lot more companies that just raised their dividends this week. As an example, we have Kroger, ticker symbol KR. They raised their quarterly dividend by 9.4% to 35 cents a share. That is up from the prior dividend of 32 cents a share. And that dividend will be payable on September 1st for shareholders on record as of August 15th. And by the way, Seeking Alpha is our official partner for Dividend News. And I have a special deal to give you. The link will be in the description and pinned comment of the video. Seeking Alpha also has a summer sale going on right now. It ends on the 4th of July, and you can get 7 days of premium for free and 20% off your first year. And by the way, this is 20% off site-wide if you use the link in my description. That could be used towards things like Alpha Picks, which is their data-driven stock picking methodology. Since July 1st, 2022, Alpha Picks has outperformed the S&P 500 at 176% versus 62%. And again, you get 20% off your first year if you use my link below. So we have Kroger with the dividend increase. This is a grocery conglomerate that a lot of our viewers are probably familiar with, especially if you live in the United States. And if you're not, maybe I introduced this company to you, as I did a full stock review on it in the past, and it used to be a part of my dividend growth portfolio. And I've just made changes and consolidated over time, but Kroger is still a very good business. And after they reported earnings this week, their stock went up by nearly 9%. And as you can see, the company approached an all-time high in stock price, and they continue to see long-term earnings growth. They trade at a reasonable valuation, and expectations are that earnings per share will grow in high single digits over the coming years. This dividend increase just came out and it's not yet reflected in dividenddata.com. It will be very soon though. And as you can see, it just adds to a track record of long-term dividend growth at Kroger. The 10-year CAGR is 13.21%. The 3-year CAGR is 15%. And the prior dividend increase was 10%. So we are trending downward with this new increase. This is a sustainable dividend though, with a 49% free cash flow payout ratio and 33% based on net income. Kroger also repurchases shares on a regular basis. This increases your relative ownership stake as a shareholder. And since they report earnings this week, let's also take a look at Kroger's latest earnings report. They saw sales grow 3.2% year over year. That was excluding fuel costs, as those are variable. It was a good quarter for profits. Adjusted earnings per share came in at $1.49. And if we go and look at my stock analysis tool, you can see that is up year over year. Last year was $1.43. Other big news, I saw this as a headline. E-commerce sales growth was up 15% year over year. You'll remember from my prior Kroger stock reviews that digital sales was a lot of their future, especially coming out of the pandemic. They made a lot of structural changes to grow that e-commerce business. And for being a boring grocery store business, the stock has done pretty well over the past 5 years. It has a 133% total return, and that's an 18.5% compound annual growth rate. And that's just an example of how a company with reliable earnings growth and a growing dividend can actually perform quite well in the stock market, as long as you're buying it at a reasonable valuation. So I would say this remains being a good dividend growth stock. If you were buying it right now, though, the dividend yield is on the lower end historically. If you remember, I was buying this a lot during 2020 and 2021. That said, the dividend yield has been as low as 1% in the past. Other dividend increases I'll share this week include General Mills, ticker symbol GIS. They just raised their dividend payment by 1.7%. That gives them a 61-cent per share quarterly dividend, which is up from the prior dividend of 60 cents per share. This is a higher yield stock. It's payable on August 1st for shareholders on record as of July 10th. When I first learned about dividend investing, this was one of the names that would come up because it's a reliable consumer defensive company. And a lot of those have a long track record of paying dividends. And you can see General Mills has had actually pretty reliable slow earnings growth year after year. And the stock price is down a good amount from its all-time high, which gives it a 4.84% dividend yield, which is getting closer to a more attractive valuation for a low growth company, which this definitely is. As you can see, they do have a long history of dividend growth, typically with annual increases, although they have held it for a number of years in the past. The 10-year compound annual growth rate is 3.3%, and the 3-year CAGR is 4.15%. The company has a free cash flow payout ratio of 45%, so this is a sustainable dividend payment. I haven't given an update on dividend raises in a couple weeks, so I'll also share 3 examples from a few weeks ago. That includes WP Carey, which raised their dividend by 1.1%, National Fuel Gas, which increased its dividend by 4%, and Target, which raised its dividend by 2%. I'll dive a little bit into 2 of these. National Fuel Gas Company, current dividend yield is 2.51%. This company has a very long track record of dividend growth. 10-year CAGR is 3%. I personally don't find this one very attractive. It's low growth, it's low yield. I'll spend a little bit more time talking about Target though, since that is a popular stock to cover. So this new dividend of $1.14 is up from the prior dividend of $1.12. It will be payable on September 1st for shareholders on record as of August 13th. And this company has been through a lot in recent history. As you can see, they peaked in both stock price and earnings in 2021, and it has been a dramatic fall off. And they had this little bit of a teasing recovery where the stock price came back up, earnings came back up, and we have dipped again. And the tariff news has created another new fear around Target stock. The current dividend yield is 4.59%, which is historically very high for the company, so this could be a good entry point for the long-term investor. The valuation is also not bad at a 10p ratio, but earnings per share are expected to decline in fiscal 2026, with growth expected thereafter. As you can see though, Target has a long history of dividend growth and annual dividend increases. I'm pretty sure this is a dividend king, meaning has 50 plus years of dividend increases. If it's not that, then it's definitely a dividend aristocrat with 25 plus years. And believe it or not, this company had very high dividend growth for a number of years. As you can see, huge increases in 2021 and 2022. If we go back and look in the dividend history, for every stock on dividenddata.com, I have decades of their entire dividend history with all the payment dates, execution dates, the adjusted dividends, the growth rates. It's all there. I made the tool for basically everything you would need. But as you can see, it was a 32% dividend increase and a 20% dividend increase in those 2 years. So if they could ever return to those kind of levels, then this 4.6% is a great yield entry point. The 10-year CAGR is 8.17%, and the 3-year CAGR is still 8.2%, but it has slowed down significantly. As you can see, we have 3 increases in a row in the 1% range, and they're all give or take 1.8%. The free cash flow payout ratio is still sustainable for the dividend at 45%, and based on earnings per share, it's at 50%. So the target dividend is still growing, and the company has sold off so much, it could be an interesting one to look a little deeper into. With that said, that's a full look at the latest earnings report for Nike and why the stock is up 15%. Plus, I look at recent dividend raises like Kroger, which also reported earnings recently. So if you enjoyed the video, please leave a like, comment, and subscribe to the channel. And if you want to use the tool I use throughout, all of this is available at dividenddata.com. I aim to design the best stock research tool for dividend-focused investors. And we're about to enter into the last week of the sale. You can lock in 50% off annual membership and keep that discounted price for life. The link is in the description and pinned comment of the video. And if it helps you find just one better investment, then it way more than pays for itself. If you're like me and you're investing thousands of dollars a month, it's a no-brainer. The data visualizations and research tools help me stay on top of my stock and make smarter decisions. And then, of course, we also have our portfolio tracker that helps keep you disciplined and take a look at your projected dividend income. If you want to try it all out, the link is in the description and pinned comment of the video. And thank you for watching. See you next time.